Hello everybody. Today I'll be doing the financial statement. Not the financial statement, the financial position or balance sheet actually. Yeah. Statement. We'll be doing the statement of financial position, and then the company that we'll be dealing with is Mazatlan Traders. So here we're given our pre-adjustment trial balance, and our year end is 31 December 2021. In our additional information, we have the following information. A physical stock take was performed on 31 December 2021. The value of the stock take on this date was 26,955. Then we have our depreciation on vehicles and equipment. Then we have notification was received that a debtor owing 489 had been declared insolvent. The amount owed should be written off as irrecoverable. After consideration of the trade receivables debtors, it was decided to raise an allowance for credit losses being 2% of outstanding debtors. And the last one says the final profit for the year after all adjustment amounts to 160,085 rand. Then going to prepare statement of financial position for the year ending 31 December 2021. So in Excel, we have our answer sheet basically. And the first thing in our balance sheet or statement of financial position is assets. So we have our non-current assets, and current assets. So in our non-current assets, we already know that we've got vehicles and equipment. So that falls part of our PPE, which is our property, plant, and equipment. Then when we go back, we have no loans. So we have no fixed deposits. So we have no long-term investments, which is our PPE. So in order to calculate our PPE, I'll be using this worksheet 2 as my calculation guide. So our workings one, which is PPE, we have land and buildings, and then we have vehicles, and then equipment, and then we have accumulated depreciation on vehicles, accumulated depreciation on equipment. Then we have depreciation on vehicles and depreciation on equipment. So here we'll have our total. It will be highlighted. So we're just going to extract the information which we have. We have land and buildings at 900,900 rand. 900,900 rand. 900. Vehicles is 208,600. 208,600. Equipment is at 122,890. 122,890. Then we have accumulated depreciation on equipment at 42,980. It's 42,980, and accumulated depreciation on vehicles 108,800. 108,800. So in order to calculate our depreciation, I'm going to start with depreciation on equipment, then depreciation on vehicles. So on equipment, it says equipment is at a rate of 10% using a straight line method. So it's 10% using a straight line method. Basically, it's our cost price multiplied by 10% is equals to our cost price multiplied by 10%. So the multiplication sign is the star, which is just above, which is just between the division and the minus sign on your keypad. It's always on your right side, depending on the laptop that you're using or the computer that you're using, but most of the time it's on the right side of your keypad where your numbers are situated. So we've got 12,289. Wait, this is vehicles. It's supposed to be equipment. So our depreciation on equipment is equals to 12,289. Get my charger, make sure that the laptop doesn't go off. So depreciation on vehicles, it's as follows. Vehicles is at a rate of 20% on diminishing balance. So on diminishing balance, we're going to take our cost price, which is 28,600, minus our accumulated depreciation, which is 108,800. Close it. Then we're going to multiply it by our percentage of 20%. 108,800. Close the bracket. Multiply by 20%. This is equals to, if you look closely, it's to 8,600 minus 108,800 multiply by 20%, and this should give us 19,960. So our total PPE will amount to the sum of everything. Okay, firstly, I'm just going to say equals to 900,000 plus our vehicles plus our equipment minus our accumulated depreciation on vehicles minus our accumulated depreciation on equipment minus our depreciation on equipment minus our depreciation on vehicles. That gives us 1,048,361, 1,048,361, and our non-current assets amount to 1,048,361. Hey. So next, in our current assets, we're obviously going to have inventory. So if you guys remember on our first note, it said the physical stock take was performed on 31 December 2021. The value of the stock on this date was 26,955. So our inventory amounts to 26,955. 26,955. Then obviously one of the most obvious accounts in our current assets is our trade and other receivables. So this is usually our debtors. So workings to amount to trade. This is trade and other receivable. Guys, I do apologize for that. I don't have really much time to record actually. So in our trade and other receivables, we have accrued income, and then we have our debtors control, and then we have our prepaid expense. So we have our accrued income, and then we have our debtors control, and then we have our prepaid expense. So our accrued income amounts to 890,000. Then our debtors amount to 20,989. Then our prepaid expense amounts to 2,469. So, and then now we're going to go to our notes. So in our notes, number 3, it says notification was received that a debtor owing 489 had been declared insolvent. The amount owed should be written off as irrecoverable. So with our debtors control, we're just going to say equals to the 20,989 minus the 489. So we're removing this amount which is owed by the debtor, the 489, and all I'm going to say is 20,989 minus or plus amount. So we have 20,500. I don't like doing this. I like keeping it separate so that you guys can see. So, not doing well. So it's going to be equals to 20,989 minus the 489, and that gives us 20,500. So we had removed the debtor was declared insolvent. So in note 4, it says after consideration of the trade receivables debtors, it was decided to raise an allowance for credit losses being 2% of outstanding debtors. So now our credit losses amount to 2% of outstanding debtors. So credit losses are equals to our debtors control multiplied by the percentage which we were given, which is 2%, and the answer will be 410. So now since we don't have any additional information on our trade and other receivables, we can now get the total, and the total amounts to, just gonna add everything up, was it 24,269? No, I don't think it was 24,269. Yes, I had to minus my credit losses, so getting a total of 23,449. So all I did was just put a negative here in the equation. I just put a negative in front of M23. So if you look at M23, that's our debtors control amount which we took from here. This was the answer. So we just subtracted our credit losses because we lost that money actually. So we got a total of 23,449, 23,449. Then we have our cash and cash equivalent. Okay, this one is much more basic. Our working stream, cash and cash equivalent. So this is our bank and our petty cash and anything related to cash that we may have. So with bank, it's 19,000. We have bank at 19,620, 19,620. Then we have petty cash at 1,090, 1090. Then our total amounts to our bank plus petty cash, and this gives us 20,710. So we've got 20,710, and our current assets amount to our inventory plus trade and other receivables plus cash and cash equivalent gives us 71,140. Our total assets amount to our current non-current assets plus our current assets, which is 1,119,475, and that's our total assets. Okay, so the next thing we have is our equity and liability. So here we start off with equity. So in equity we have capital, and if you look here, here's our capital. Our capital amounted to 1 million from the owner, and we have no transactions because we've done our first note, second note, third note, fourth note. We just left off this note. The final profit for the year after all adjustments amounts to 160,085. So everything else we going to take it directly from here. So we're going to start off with our capital of 1 million rand. It is 1, 1, 2, 3, 1, 2, 3. Yes, those are enough zeros. It's of 1 million rand. Then we have our profit, and our profit amounted to 160,085. 160,085, 160,085. Then if you look here, there were drawings during the year of 75,050. Usually during the course of the year, when calculating our capital, we would minus out the drawings because the drawings are done by the owner. So we would subtract whatever amount that you took from his capital. So we're going to subtract this in the equities account. So we're going to say less drawings. And our drawings amounted to 75,050. So that's a negative 75,050. So our equity actually amounts to our capital plus our profit plus our drawings. So because it's a negative, I will need to say minus. If you guys know that most of us know that a negative number multiplied by a positive number gives you a negative number. So if we add a plus here, what's gonna happen is that this plus here is going to be multiplied with a negative, and it's going to give us a negative, still a negative 75,050, which will be subtracted from these two amounts here, and then it gives us a total of 1,085,035 rand. Then we have Okay, I almost said non-current liabilities without checking. So we don't have any non-current liabilities. We don't have any loans or long-term debt. And obviously we've used all the information here, so there's nothing that we need to extract from our additional information. So what we have here is our current liabilities, current liability. And in our current liability we have the obvious one, trade and other payables, which is our creditors. Then I'll just say total equity and liability. So what we have first is our accrued expense. I'll have to go back to our workings 3, our workings. So we have workings 4, which is trade and other payables. And the first thing we have is accrued expenses. Accrued expenses, and they amounted to 1,260, 1260. And then we have creditors control of 24,890. Creditors control 24,890. Then we have income received in advance of 8,290. It was 8,290. Yes. So we're going to just get the total of these. And the total here amounts to sum of. So I choose the first column, the first cell. Then I say double dot. This is the last cell. So everything that's highlighted will be added, and if it's a negative, it will be subtracted. Then so our total is 34,440, which is 34,440, and our current liability is equals to 34,440. And here I'm just going to say our equity plus current liability gives us our total equity and liability. And you guys can see our total assets and total equity and liability actually match. So here's our assets, then here's our equity and liability. Then our calculations are as follows. This is our workings 1, which is PPE. Then we have our workings 2, trade and other receivable, where we took our accrued income and debtors and then added our debtors control. In our debtors control, if you remember, this 489 was the debtor was declared insolvent and could not pay off their debts, and we wrote them off. This was a debtors control balance that we had at the time. Then we had our prepaid expense, and here we had our credit losses, which was 22% of our debtors control. Then here was the total. Then our last two workings were just simple, because all we did in our last two workings was just add the amounts which we had in our trial balance. There were no extra calculations needed. Okay guys, I hope you enjoyed the video, and thank you very much.